I'd say the one area that I feel reasonably comfortable in is I'm short the United States dollar. Currency trends tend to run at least 2 or 3 years. We had a long one here, over 10 trillion, something like 13 trillion came into the US dollar during the previous decade. I will say, full disclosure, I missed the dollar. It's probably the biggest miss in my career in currency trades. I missed the last 9 months run up in the dollar. I just couldn't bring myself to own Joe Biden and Jerome Powell. I think now that on a relative basis, the tightening in the U.S. going forward will not be as much as the foreigners now that we've weaponized the dollar, and you've got people like Lula running around asking why we need to be trading in U.S. dollars. By the way, it's not a bad question. Historically, we could be trusted. We had a rule of law, a lot of things. So about the only space I have any risk on right now is in the U.S. dollar. Don't run out in short dollars. I could change my mind in a week. But that's where I am right now, and I'm also long gold, obviously, for the same reasons.
Stanley Druckenmiller, billionaire investor, telling you to short the dollar and long hard assets like Bitcoin. It's time to opt out. Crypto family, welcome back to the channel. Aaron here, coming back at you with another cryptocurrency video today. As you guys just saw in that clip, that was billionaire investor Stanley Druckenmiller. He's talking about Bitcoin in today's clip. He's talking about what he thinks about the future of cryptocurrency and Bitcoin, and he thinks that the future could be promising for BTC. So let's go ahead and jump into today's clip. Leave your thoughts in the comment section below. Let me know what you guys think about Druckenmiller's thoughts, and let's go ahead and check out the clip.
I don't know whether I'm seeing it, but I expect it to. You can't build over $2 trillion in wealth in purchasing power and then take $1 trillion of it out and not matter. John, I also have high frequency signals, and there certainly seems to be a strong correlation between crypto and the NASDAQ. I don't think it takes a genius to figure out why. So I'm looking at it as an indicator that way. Crypto, everything that Charlie Munger says about it, I'm sympathetic to. Everything that says Bill Miller says about it, I'm sympathetic to. So I think that's a movie that has yet to be played out, and one that I don't want to bet on in conviction, but I will be very surprised if blockchain isn't a real force in our economy, say 5 years from now to 10 years from now, and not a major disruptor with companies that will have been founded between now and then that'll do very well, but that will also challenge things like our financial companies and do a lot of disruption. So I find crypto interesting. My 69th birthday is in a couple of weeks. I'm probably too old to compete intellectually with the young people in this space, but I'm certainly monitoring it. I'm not sure why, other than NASDAQ type risk play takers are the ones that tend to play in Bitcoin, and curmudgeons that are gold bugs and want the world to fall apart play in gold. But there's no question, and this I've watched, and it's gone on long enough now that I believe it, that if you believe we're going to have irresponsible monetary policy and inflation going forward, if it's in a bull phase, you want to own Bitcoin. But if it's in a bear phase for other assets, you want to own gold. And I think I just articulated the reason, but sometimes, John, I don't care. This has gone long on enough that I'm starting to believe what I'm observing. And for sure, if I think we're going to have an inflationary bull market, I'd want to own Bitcoin more than gold. And if I thought we're going to have a bear market, stagflation type thing, I'd want to own gold. Doesn't mean I'm going to believe that in a year, but that's my assumption going forward from this point. Over-the-counter FANG type investors, if they believe inflation and they tend to be younger, they want to play Bitcoin. Old curmudgeons that secretly want the world to fall apart, they don't own Bitcoin, they own gold. So, but that's kind of cheating, because that's kind of a reason I've made up for what I've observed. I think you gotta know your own biases. if I was a tech investor, I would certainly be learning. We had the internet wave, we had the cloud wave. Cloud doesn't look like it's over yet, but I would certainly be looking into blockchain very deeply and to the possible disruption it might take. But I think fundamentals are fundamentals. Look, when companies are losing money, capacity is always going to shrink and their margins are going to look better in 3 years. When companies are over earning, their margins are going to come down in 3 years. I think all that stuff will be out there. I think the great thing about my original mentor, Spiros Drelis in Pittsburgh, was he made me focus on what moves the stock price. Like, you can't just say, Stan, okay, this is a great company and the earnings are great. He said, tell me how people are going to think differently in 18 or 24 months about the situation than they're thinking now. That would be my number one advice to the young people. Do not invest in the present. The present is not what moves stock prices. Change moves them. And I want you to try and envision a different world in a year and a half from now and where these security prices would trade versus now, given the world you envision. That would be my number one advice to a young person getting in the business.
So you guys can see Stanley Druckenmiller is talking about invest in the future. Do not invest in the current day. You don't want to invest in all the best companies. You need to look into the future, see what the best assets are. And you can see that right here on this Bitcoin chart. This is the Bitcoin liquid and illiquid supply chart. You can see right here, this blue area is the illiquid Bitcoin supply, basically the Bitcoin that does not move. You have the orange, which is the liquid, and then you have the red area here, which is highly liquid. Now, one thing to notice here, the Bitcoin illiquid supply continues to go up and up and up. These are just people who love Bitcoin. They want to hodl it. They're not going to sell for a long time. So you can see that's continuing to go up and has continued to go up since the start of BTC. And after that 2020 halving that we had, the Bitcoin illiquid supply really started to go up even faster. As you see, the liquid supply started to go down for the first time in history. So we're starting to see a bit of a trend change here after the 2020 halving. You guys know that the block rewards got cut in half for all miners. It's harder for miners to get more BTC. So you can see the liquid supply is actually going down for the high liquid and just the liquid supply all together. And as the halvings continue to happen in 2024, in 2028, in 2032, it's going to be harder and harder for these miners to get more BTC. So the data is showing you right now, people believe in Bitcoin. The liquid supply holders continue to buy more and more Bitcoin, while the available amount of BTC, this is basically the Bitcoin that controls the price, is getting lesser and lesser as the years go by. And we've seen that trend change, guys. So look at what the data is showing you. You can see what the future will be. Not financial advice. This is basically Bitcoin on-chain data. This is Glassnode. If you guys want to check it out, you can use our affiliate link. That will be in the description below and also the comment section. You get 10% off if you want to sign up for Glassnode. Check that out if you guys want to. But the proof is in the pudding. Check out this data. Thank you guys for watching all the way to the end of the video. Make sure to hit that like button if you found any value. Check out our Patreon. The link will be in the description below for exclusive content from the Bitcoin Bros. This is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one and have a great rest of your day.